Dr. Trader is back. US oil is falling for a third consecutive session, but this is not a clean one-way bearish setup. Price is below both weekly reference levels, while the latest inventory surprise and positioning data leave room for a sharp rebound. At the time of publication, US oil is trading near 82.49. That is about 0.75 below weekly VWAP at 83.24 and roughly 4.84 below weekly TrendSL at 87.33. Sellers control the current price map, but confidence in the bearish thesis remains low. The newest pressure comes from the Strait of Hormuz. An improved chance of reopening reduces the supply disruption premium that had supported crude. As that fear premium fades, the physical inventory picture matters more. U.S. crude inventories increased by 0.095 million barrels. That is still a build, but it is far smaller than the forecast increase of 1.6 million and the previous build of 4.405 million. So the release is relatively supportive, even though inventories did not actually fall. The intermarket check adds another complication. The dollar index is leaning lower, which would normally help dollar-priced oil, yet crude is also declining. This divergence suggests that supply expectations and the retreat in geopolitical risk premium are currently outweighing the currency channel. COT positioning is described as bullish in the research brief, but the exact report week and net position figures are unavailable. Treat it as delayed directional evidence, not a real-time trigger. This is where traders can get trapped. Selling simply because oil has fallen for 3 sessions means entering after part of the Hormuz premium has already been removed. Buying only because the inventory build missed the forecast ignores the broader series of inventory increases and the bearish price structure. There are 2 paths from here. The bullish path begins if price reclaims weekly VWAP at 83.24 and holds above it. That would weaken short-term bearish momentum and justify reducing bearish exposure. The bearish path remains active while price stays below VWAP. Continued inventory builds or further progress toward reopening Hormuz would reinforce that scenario. A weekly close above TrendSL at 87.33 is the decisive line. It invalidates the bearish structure and requires a full reassessment. The decision for this week is wait, not chase. The directional lean is bearish, but conviction is low because inventory, positioning, and the dollar are not giving uniform confirmation. Watch price behavior around 83.24 before committing to a scenario. Follow Intermarket Edge for the next signal update. Signals are informational only, never a promise of returns. Manage your own exposure and risk.